Many business owners assume that once they hire an accountant or a bookkeeper to file their annual taxes, their daily financial operations are fully handled. In reality, the founder often remains the central bottleneck. You might have someone entering the data into the system, but you are still forwarding invoices, explaining vague bank transfers, and manually approving expense claims. By the time those transactions are processed, you might receive your monthly reports 3 to 6 weeks late. If you need to make critical decisions about your cash flow today, relying on data that is over a month old leaves you guessing. Checking off the compliance boxes and technically completing your accounting records does not mean you have actionable visibility or any real control over how the business is operating in the present moment. To understand the disconnect, we have to look at what bookkeeping actually does. It is the foundational practice of recording historical transactions, capturing the sales, the purchases, and the payroll entries after they happen. Finance control answers a completely different set of questions. It tells you exactly which supplier bills are due this week, which customers are consistently overdue, and what immediate cash decisions require your attention. A common trap is assuming that purchasing modern accounting software will magically close this gap. Software is highly efficient, but it requires human discipline to properly map the chart of accounts, code the transactions correctly, and enforce the rules of the system. Bookkeeping is a record-keeping activity focused entirely on the past. Finance control is a proactive operating discipline focused on the future. A bookkeeper cannot invent financial clarity out of thin air. They are entirely dependent on receiving accurate, timely inputs directly from the business side. When this process breaks down, it usually takes the form of unexplained bank transactions, lost vendor receipts, and informal reimbursement requests scattered across a dozen different email threads. Without those inputs, the vital outputs of your business begin to suffer. Customer balances go uncollected because no one is tracking them, and supplier payments become uncoordinated, draining your cash reserves at the worst possible times. Without someone taking end-to-end ownership of this workflow, your bookkeeper becomes a person perpetually waiting for incomplete information, leaving the business exposed to significant risk. To fix this operational vacuum, we can look at a framework built on 4 distinct levels. This is how you transition from basic data entry to a fully functional finance system. Level 1 is transaction recording. This is the basic bookkeeping we discussed earlier, logging the daily sales and expenses. This is also where the vast majority of small businesses stop. Level 2 is reconciliation. This requires someone to actively verify the bank feeds, the credit card statements, and the payroll balances to ensure the recorded data is actually reliable. Level 3 is reporting. Once the data is reliable, the business needs to produce clear, timely monthly numbers that management can read and understand to gain visibility into the company's health. Level 4 is review and action. A professional sits down to analyze those numbers, follow up on missing items, and plan strategic next steps. This is where true control is established. Generating a beautiful report at Level 3 provides absolutely no value if it fails to trigger the rigorous review, the difficult questions, and the decisive actions required at Level 4. Reaching those top tiers consistently requires the business to establish a strict, recurring monthly finance rhythm. This rhythm dictates exact dates for document collection cutoffs. It establishes a clear schedule so you have complete visibility over your accounts payable and accounts receivable before the end of the month. A reliable schedule also ensures that payroll is coordinated accurately, eliminating the chaotic, stressful scramble to assemble your records right before the annual tax deadline. Establishing this predictable pulse transforms the finance function. It stops being a reactive compliance burden and becomes a proactive management tool that actually drives your business forward. For growing companies, the ultimate question to ask is not who enters the data into the system. The question is who actually owns and enforces this entire financial rhythm. Bluebox takes ownership of that rhythm. We provide accounting, tax, finance operations, and managed business support, integrating everything so that a healthy financial workflow becomes a seamless part of your operations. Bookkeeping tells you what happened in the past. Finance control helps you run your business today with fewer surprises.